Dear students, today we are discussing the third problem from cash flow statement. This will be the last problem in this chapter. So by this we will be completing the 12th class accountancy. So far in the three other classes we have discussed almost all the things related to cash flow statement. So here we are going to discuss certain adjustments like how to treat proposed dividend, then accumulated depreciation, etc. So here is a question. From the following balance sheet, prepare cash flow statement. Balance sheet is given for the year 31st March 2019 and 31st March 2020. So in this balance sheet, if you see, normally what are the things are there, that are all those things are given, and below that this showing contingent liabilities. Dividend proposed for the year ended 31st March 2019 amounted to rupees 1,20,000. So as per the new format, if proposed dividend is there, it will be given under the heading contingent liabilities. So that shows that this is the dividend proposed in the last year. Last year proposed dividend should be given this year. So last year proposed dividend, why it is not shown inside the balance sheet is that dividend will be proposed after or at the time of annual general body meeting. Annual general body meeting will be held after completing the final accounts. So after that the company will decide to give dividends which is proposed for the last year. So that last year dividend will be paid this year. That means in 2019 dividend will be paid in the year 2020. So that is what it is given separately as a contingent liability. So this will be added for finding net profit before income tax and or net profit before tax and extraordinary items, and it will be deducted as a financing activity. This is what we have to do with the dividend, proposed dividend. Okay. So proposed dividend will be added while calculating net profit before tax and extraordinary items, and will be deducted as an item in financing activity. So that is the adjustment related to dividend proposed or proposed dividend. That's clear. Now this is the balance sheet. In that, reserves and surplus, that is one note is given. Let us see what are the reserves. In that, capital reserve is there, general reserve also is there. Then surplus is there, that means profit for the last year and current year is given. Then next, second note number is long-term borrowings. Long-term borrowings, here 10% debenture is given as long-term borrowings. Then third note to account is other current liabilities. Let us see other current liabilities. In that, what is other current liabilities? Outstanding expenses. Then fourth one, short-term provisions. Short-term provisions, which are the items in short-term provisions? Short-term provision also, it says about one of the provision, that is provision for tax. That is only one provision related to short-term provisions. Okay. So provisions for tax account also we will prepare, and last class also we have prepared the provision for tax. And fifth note to account is fixed asset, that means tangible fixed asset. In that, it is given here plant and machinery, its cost price is given, and accumulated depreciation is deducted. Okay, so this also we have discussed in the last class, isn't it? Now let us see what are the additional information is given here. During the year, plant and machinery with a book value of rupees 11,250 was sold for rupees 9,000. That means this is sold at a loss, isn't it? So 2,250 was the loss. And see here the accumulated depreciation is given. So we have to deduct the accumulated depreciation and after that we have to find out the loss. So anyway we will prepare that accumulated depreciation account, because accumulated depreciation account balance is given. So we can prepare accumulated depreciation account as well as here plant and machinery account. So we have already told that if an adjustment is given related to any asset, the concerned asset account is better to be prepared. Then another one, during the year investment costing rupees 90,000 was sold at a gain of 12.5% on costs, which was transferred to capital reserve. And also investment costing rupees 90,000 was purchased. That also is given. So anyway, we will see that also. Then it is given that tax of rupees 61,875 was paid during the year. Then fourth point, at the beginning of the year, debenture of rupees 1,12,500 were redeemed in the beginning of the year. Then interest on debentures paid during the year 24,750. So these are the adjustments. Let us see the preparation of cash flow statement. So here cash flow statement, its format is prepared, format is ready. So we know that first item is cash flow from operating activity. In that we will write the first item as net profit before tax and extraordinary items. So that we have to calculate first. So let us do the calculation for that. Net profit, that means working note 1, net profit before tax and extraordinary items. So here is the statement. In that, what is the first item? Yes, closing balance of profit as per statement of profit and loss will be written. So closing balance of profit is given here. You can see 61,875 is the, closing balance is 1,91,250. That will be written first. 1,91,250. Then from that opening balance will be deducted. Opening balance 61,875. So that is deducted. So if we deduct, we will get the amount, that means profit for the current year we will get. So that we can write net profit for the current year, that is 1,29,375. Then we will make other adjustments, appropriations. So which are the appropriations? First, transfer to reserve is there. Transfer to reserve, we can see reserve opening balance was 2,25,000 and closing balance was 2,81,250. So the difference is the amount transferred to reserve. So we can write here transfer to reserve. In bracket we can write what is the amount, 2 lakh, that means rupees 2,81,250 minus rupees 2,25,000. So that we can write here. So we will get the balance 56,250. Okay. So that is written. And next item, we have told proposed dividend notes to account. In that we have written contingent liabilities, proposed dividend declared. So that we have to write next. So 1,20,000 is written. Then after that, provision for tax made during the year. So for that, let us see the provision for tax account. Let us prepare the provision for tax account. Provision for tax account we have to make, so that we are writing first, and after that this working note we can see. So opening balance of provision for tax will be written on the credit side. Its amount we know. Provision for tax opening balance 1,12,500. It is there in the balance sheet. Notes to account. So that can be written first. 1,12,500. Then closing balance will be written on the debit side as the last item. So what it is, 1,23,750. Okay. Now here in this case, adjustments, it is given that tax of rupees 61,875 was paid. See, in the last problem, tax made during the year was given, or tax created during the year was given. So that will be adjusted in the P&L account. But here it is tax paid is directly given. So we can write that in the debit side to bank, that is tax paid 61,875. Okay. Now we have to balance the account. Okay. Account is balancing. Balance we will get on the credit side. How much? 73,125. What is that? That is the dividend, that tax made during the year. Isn't it? So in bracket, if you want, you can write tax made during the year, or tax made during the year means tax created during the year. Okay, so that is the amount here, 73,125. Okay. So this tax made during the year is related to this 73,125. Okay. So that tax we are taking here 73,125. Okay. Now we can total all the amount to be added, and the total amount of profit before tax and extraordinary item 3,78,750. Okay, so that is the net profit before income tax and extraordinary items. That can be taken to the cash flow statement as the first item under cash flow from operating activities. Okay, so that we are writing in the outer column. Then we will add all the non-cash, non-operating expenses. One by one we can write. So first of all, let us see, depreciation is there. Let us write that one first. Depreciation we can write. Here we have depreciation. We are going to calculate here as the working note 3. So first of all, we can prepare accumulated depreciation account. In accumulated depreciation account, let us give the account heading. So depreciation, accumulated depreciation account is a liability account. So we can write the opening balance 2,25,000. You can see here in the notes to account, 1,25,000 is there, that we can take in the credit side of the account by balance brought down 2,25,000. And the closing balance we can take in the debit side to balance carry down. How much? 2,81,250. Okay. Now here it is given that in the adjustment during the year, planned with a book value of rupees 11,250, accumulated depreciation 33,750 was sold. So 33,750 is the depreciation of plant and machinery sold. So that we can write here. That means from this total accumulated depreciation, what is the depreciation for the sold machinery, that will be deducted from accumulated depreciation account. Okay, that is the speciality of accumulated depreciation account. So you have prepared in the last year depreciation chapter. There you have to prepare, you had prepared the accumulated depreciation account, and there you have done where the machinery is sold, you have deducted the depreciation for that machinery sold from the accumulated depreciation account. That's what we are going to do here also. So machinery, plant and machinery, that means the amount of depreciation for the machinery sold will be transferred to machinery account. Okay, then after that let us balance the account. So we are getting 3,15,000. That 3,15,000 we can transfer here. Okay, and we will get a balance 90,000. So that, what is that 90,000? That is the depreciation created during the year. That is depreciation created during the year. Okay, understood? So this depreciation created during the year is to be taken in the, it is to be taken here, where for adjusting non-cash, non-operating expenses. So it's a non-cash expenses, that is why it is taken. Now the depreciation account is not completed. See, accumulated depreciation account is made, and from this account we have transferred depreciation for the machinery sold. So let us prepare plant and machinery account also to see that how the items will be shown in that account also. So here plant and machinery account, we can write the opening balance. Opening balance is 11,25,000, you can see. So 11,25,000 we are writing here to balance brought down. And closing balance will be written at the end of credit side. Closing balance, here we have closing balance 13,50,000. So 13,50,000. See, one thing you can see, opening balance 11,25,000, and from that we have sold some machinery. After that also we have a balance which is more than the opening balance. What it means? Some of the machinery is purchased, isn't it? Let us see how much machinery is purchased. So in order to see that, we have to adjust the depreciation charged or depreciation transferred from accumulated depreciation account. That we can write. Before that, let us see how much value of machinery is sold. During the year, plant and machinery with a book value of 11,250 was sold for 9,000. So it is sold for 9,000. We will write by bank. How much we have got? 9,000. isn't it? And its depreciation for the sold machinery is 33,750. That is transferred from the accumulated depreciation account, that we are writing here 33,750. That is the amount of depreciation charge. So its value was, the machinery sold was book value 11,250, isn't it? After deducting the accumulated depreciation, and that is sold for 9,000 rupees, isn't it? So we have got a loss. Loss how much rupees? 2,250 rupees is the loss. So that will be transferred to profit and loss account. So we can write that here in bracket, you can write loss on sale of plant or plant and machinery, isn't it? Plant and machinery. Okay, let it be that much. Anyway, you understood that. So loss on sale of plant and machinery 2,250. Now these are the items, and let us balance that now. Total 13,95,000, that can be taken to the debit side, and now we are getting a balance here 2,70,000. What it is? It is there in the debit side of an asset account. So debit side of asset account means asset increased, plant and machinery increased. How it will increase? By purchase. So by bank we can write. Okay. So here depreciation is there, that we have written in the operating activity. Then after that, loss on sale of fixed asset is there, that also we can write loss on sale of fixed asset 2,250. This is also non-operating loss, isn't it? Then another item is interest on debentures paid during the year. It is given in the additional information. Interest on debentures paid during the year 24,750. So that also we can write interest on debentures paid 24,750. Okay. Now we can total the amount. All the amount added can be totaled and can write. So that can be added to net profit before tax and extraordinary item. Then we will get 4,95,750. From this, what is this? This amount is operating profit before working capital changes. There are no operating incomes, so nothing was there to deduct. So we can show this directly as operating profit before working capital changes. Now we have to see what are the changes in working capital. Here what we will add, all the decrease in current assets and increase in current liability. So decrease in current assets, let us see any asset is decreasing. Inventory from the previous year, it is increasing, not decreasing. Trade receivable also increasing. Then other current assets, that means prepaid expenses, that also increasing. So we cannot write any decrease in current asset. So let us see any increase in current liability is there. So we have to add decrease in current asset and increase in current liability. So no decrease in current asset here. Now we are seeing any increase is there in any of the current liabilities. Yes, trade payable is increasing. So we can show here add increase in current liabilities. In that first item, trade payables. Trade payables, how much is increasing? 1,01,250. So trade payable increased and here other current liability decreased, so that cannot be written, so only one item is there to add, so we can add and write that down, 5,97,000. Now let us deduct increase in current assets. Various current assets are there which are increasing, and one current liability is there which is decreased. What is that? Other current liabilities. We will see that it is actually decreasing or not, that we can see in the notes to account, that we will see later. Before that, let us write all the increase in current assets. So the increase in current assets here, inventories increased and trade receivables increased. So first of all, let us write inventory. Inventory, how much is increased? It is increased from 2,25,000 to 3,03,750. So 78,250 is 750 is the increase. Now trade receivables. Trade receivable is increased by 50,625. Okay. Then another prepaid expenses, other current assets in that prepaid expenses, that also increased. So we can write prepaid expenses. How much is the increase? 2,250. Okay. Then other current liabilities, all the current assets we have written. Now other current liabilities, whether it is increasing or decreasing. Here it is showing a decrease. So let us see its notes to account. Other current liabilities, outstanding expenses, it is decreasing. So we can write this decreasing from 22,500 to 13,500. So we can write here outstanding expenses, how much? 9,000 is the amount of decrease. So the total amount to be deducted is 1,40,625. Okay, that can be deducted from 5,97,000. So what we will get? 4,56,375. What is that? That is cash generated from operations. So what is the next step? Yes, from this we have to deduct income tax paid. Then we will get cash flow from operating activities. So let us deduct income tax paid. Income tax paid was given in the adjustment itself. We have prepared the account also, 61,875. That is given here also, isn't it? So 61,875 can be deducted. So it is deducted and we will get the final amount of cash flow from operating activities, 3,94,500. Okay. Now the second one, cash flow from investing activities. So in investing activities, let us see the account we have prepared. Here we have prepared some accounts. So let us see that from that what are the items we will be getting. Machinery account. Here one sale is there, one purchase is there. These are the two items we can take from this account. And after that, investment is also there. So let us see that one. Proceeds from sale of plant and machinery. That means sales. We have sold it for 9,000 rupees. Okay. Then after that, any other sale proceeds? Yes, it is there. Here it is given that during the year investment costing 90,000 was sold at a gain of 12.5%. See, its cost price was 90,000 and it is sold for 12.5% on cost. Then how you can calculate the selling price? If 90,000 is 100, what will be 112.5%? Or you can find out 12.5% of 90,000 and that can be added to 90,000. Then you will get selling price. So that selling price we are writing here. Okay. So profit 90,000 is the cost and 11,250 is the profit. So the total amount 1,250, isn't it? And see, this profit is the profit shown in the reserves and surplus. That is why it is given that profit on cost which is transferred into capital reserve. That is the amount shown in the capital reserve. Understood? So here this is the 11,250. So that is what is transferred into capital reserve. Now again we have purchase of machinery. So purchase of machinery is to be deducted, that we are deducting. And then one more thing is given here in the adjustment. And also investment costing rupees 90,000 was purchased. So that is also an outflow of investing activity. Outflow in investing activity, that is 90,000. We can deduct that. Now we will get the total amount here. Total amount of cash flow from investing activity. It is cash used in investing activities, because it is getting minus amount 2,49,750. Okay. So investing activity is over. Now let us see cash flow from financing activities. In that we have to see what are the items, what are the information given with the financing activities. Financing activity will be here in liability side of the balance sheet. Liability side of the balance sheet, one by one we can see. Share capital is increased from 6,75,000 to 7,87,500. So here is issue of shares. Okay, proceeds from issue of shares. So 1,12,500. Then what is the next item? Here share capital over, reserves and surplus, that also over. Then long-term borrowings. Long-term borrowings, in notes to account it is given that 10% debentures. In 10% debentures, if nothing is given regarding the interest, we will take 10% of interest on opening balance. That means here we will get 36,000 as the interest. But here in this question, interest is given here. Interest was paid for this much only. How much? Interest on debentures 24,750. Okay. So that we can write 24,750 will write. Sorry, this is not the item. Interest paid on debentures 24,750. Then repayment of debentures, that also is given in the adjustment. What is given? At the beginning of the year, debentures of rupees 1,12,500 were redeemed. That means this year debentures were redeemed. See, you can see debentures last year this much was there, 3,60,000, and it is decreased. That is due to redemption. So how much is redeemed? 1,12,500. Yes, 1,12,500 is the difference. That is redeemed. So we can write that in brackets. Okay. Now proposed dividend paid is there. That also will be shown in the financing activity. That proposed dividend is given here in the adjustment. So this proposed dividend, once we have taken for adding with the profit, there we have told that in financing activity we have to deduct that also. So to 1,20,000 we have deducted here. Okay, now we are getting the total of cash flow from financing activity, that is cash used in financing activity. This minus figure, so it is cash used in financing activity 1,44,750. So what we will do now, we will add all the three items. What is that? That is the net increase or decrease in cash and cash equivalent. Net increase or decrease in cash and cash equivalent. That is the total of all the three. That means A, B and C. That is, yes, cash flow from operating activities, cash flow from investing activities and cash flow from financing activities. Let us total that. Here 3,94,500 minus from that. That means you can take the total of these two minus figures, and from that this can be 3,94,500 can be deducted. So the total of these minus two figures will be 3,94,500. From that, if you deduct this one 3,94,500 again, then you will get 0. That means net cash equivalent, cash and cash equivalent is nil. Okay, so opening cash and cash equivalent, we have to add with that. We have got opening cash and cash equivalent, how much? 10,000. Then we will get closing cash equivalent, cash and cash equivalent. Understood? So one thing you can check here, cash and cash equivalent opening 10,000, closing 10,000. So if the same amount is given for opening and closing cash equivalent, in normal cases, net increase or decrease in cash and cash equivalent will be nil. Okay, so that is another speciality why this problem is chosen to explain to you. Okay, so this is what regarding today's problems. So this is the question. Okay, right side you can see the question, and these are the items in that, and the left side this is the answer to that. Okay, so as usual what I am telling is that today also you can write by pausing the video, you can write down the question first. Okay, so initial part we have, when in the beginning when I have explained that question, that part you can pause and write down the question and solve the question once again. Okay, and after completing your solution, check the solution what we have made here. Then if there is any deviation or differences, you can check that what is the difference and how that difference came. And along with that, after completing this, you can solve some other reference problems, that means problems from the reference books. And if there is any doubt, please inform that to me. We can try to solve that. Okay, so that by this we are going to wind up not only this chapter, the 12th class accountancy this year. Okay, thank you very much.